Welcome. Today, we're going to dive deep into crypto's, well, pretty wild ride through the first part of 2025. We've looked through a whole stack of your sources, market analyses, regulatory news, you name it. And honestly, I'm curious to see what jumps out. Our goal here, cut the noise, find the really key stuff, basically give you a shortcut to understanding what actually happened in this, really dynamic period.
It definitely was dynamic.
Yeah.
And transformative, I'd say.
Yeah.
What's really insightful, I think, isn't just the headline growth in market cap and trading volume. It's why. Largely driven by growing institutional interest in those big approvals, right? The spot Bitcoin and Ethereum ETFs. That really points to a market showing remarkable resilience, even with some early bumps.
Okay, yeah, let's unpack that resilience idea. So the global crypto market, it started 2025 pretty strong, right? Hit a peak market cap, what was it, $3.76 trillion on January 7th.
That's right, early January.
But then Q1 was tough. Market cap dropped back down to $2.77 trillion by March. So that recovery is impressive, sure. But how do we know this resilience is like the new normal? Not just crypto being crypto, bouncing around.
That's a fair question. Is it real maturity? Well, look, this bounce back happened despite those Q1 challenges, the macroeconomic stuff, U.S. trade tariffs even.
Yeah.
It wasn't just a quick rebound. The market recovered, then surged past $4.1 trillion by mid-August. And here's maybe the killer stat. Overall crypto exchange trading volume. First half of 2025 hit a multi-year high, $9.36 trillion. That's 7.5% higher than H1 2024, and a massive 125% jump from H1 2023.
Wow. Okay, 125% is huge. That kind of volume does suggest something structural, but does all that trading just mean more action, or does it mean like healthier markets? Could it still be speculation driving some of it?
Well, speculation is always part of it.
Right. And Bitcoin and Ethereum were obviously central. Bitcoin stayed mostly above $100, even hit a new high.
Yeah, over $123,000 in July, and Ethereum broke some key resistance levels too.
So what was the real rocket fuel there? Was it just the ETFs?
It really seems like the primary engine was that unprecedented demand from the U.S. spot ETFs. I mean, look at December 2024 Bitcoin ETFs soaked up 51,500 BTC. That's almost 3 times the amount mined that month.
3 times mining. Okay, that's significant buying pressure.
It is. And then just one day, August 11th, the spot Ethereum ETFs saw over $1 billion in inflows. One day.
$1 billion in a day, right.
So, yeah, it fundamentally shifts things, doesn't it?
Yeah.
From mostly retail speculation towards more institutional capital, it suggests, potentially greater stability.
That institutional angle is definitely changing the game. Okay, speaking of shifts, Bitcoin's dominance, it actually went down a bit by August.
It did, slightly. And Ethereum's dominance went up.
And we started hearing that term again, alt season. People looking beyond the big two. What's happening there?
It's pretty telling, I think. As Bitcoin maybe consolidates after its run, investors start looking for higher beta opportunities.
Higher risk, potentially higher reward altcoins.
Exactly. And we saw strong performance from coins like Hyperliquid, Monero, even XRP showing signs of life. It suggests the landscape is getting broader, more diversified. People are looking beyond just Bitcoin and ETH.
Okay, so diversifying.
Yeah.
And it sounds like maybe maturing too, with more focus on actual use cases, these utility-driven narratives.
Absolutely. That's a key trend. AI-related crypto became one of the fastest growing areas. And real-world asset tokenization, RWA, that just surged. Over $25 billion in Q2 2025 alone.
$25 billion. How does that compare?
We'll get this. It's a 245 times increase from 2020 levels.
Oh, okay.
Yeah. And DePIN, Decentralized Physical Infrastructure Networks, that ecosystem also grew significantly. So this growth, especially RWA and DePIN, it's about tangible use cases, right? Bridging crypto with traditional finance and real-world stuff, actual value creation.
Okay, that's the positive side. Growth, utility, institutional adoption. But let's be blunt. There's a huge elephant in the room, isn't there? Security. The first half of 2025 was, frankly, terrible for breaches.
It really was. Stark numbers. Yep. About $2.47 billion stolen. Scams, hacks, exploits. That's more than was lost in all of 2024.
More than all of last year, just in the first 6-7 months.
Yeah. And that huge Bybit breach, and those $1.4 billion just on its own. So here's the critical observation, right? The market's advancing fast in terms of investment, utility, but the security infrastructure is just not keeping up. Not at all.
Which has to make you question investor confidence, doesn't it? And whether this growth is really sustainable without massive security upgrades.
Exactly. It's the crucial question. You need robust security. urgently.
Okay, so let's try and pull this together. What does this deep dive really mean for you, the listener? We've seen this picture of a crypto market that's, yes, surprisingly resilient. It's pulling in huge institutional money via ETFs, and it's diversifying into these utility areas, AI, RWA, DePIN.
But the crucial takeaway, I think, is this kind of paradox of maturation, the financial sophistication, growing incredibly fast. But the underlying security, it's really struggling to keep pace with the value and the complexity.
Yeah, it's a really powerful reminder, isn't it? As this whole digital world expands, understanding what's really driving value, but also where the weaknesses are, it's just more critical than ever. So here's something to think about. With the market clearly maturing, moving towards real-world utility, integrating with TradFi, how can future innovation possibly balance that explosive growth with the absolute need for rock-solid, impenetrable security? Can it?